let's get in Vikas Gupta. He's the MD at PG Electroplast and he joins in right now to talk about what could happen in H2 after what has been a peculiar Q2. Remember, PG hasn't quite cut the guidance too much. But Vikas, thanks so much for joining in. And let's start with the RAC segment weakness, right? Early monsoons, whatever. What specific measures are you implementing to accelerate inventory clearance and support growth?
Basically, for us at PG Electroplast, the order book that we have and the kind of ramp up we have seen in the months of October and November, the kind of pickup that we are seeing, we are quite confident that the inventory should normalize by end of December for us. When we talk about the normalization of inventory, it means an inventory level of almost around 1 month of production, 1 month of the sale. So we expect to reach that level of inventory by end of December. We are quite confident on that.
Oh, okay, no, Vikas, that's interesting. Simply because we were speaking to Blue Star yesterday, who said that the inventory levels for them are higher than normal, and for the industry, they are higher than Blue Star as well. Do you differ from what Blue Star is talking about inventory?
For us, the sense that we have from our clients, I will repeat that, we are very confident that we should be able to normalize inventory because please understand, December end, there will be a changeover to a new rating label. So we will be shifting to a new rating label from January 2026, new rating table. Okay. So we have to clear out a lot of inventory and a lot of brands will be picking up the inventory by end of December because there is a big cost up in at least 2 different categories of products. One is in the 5-star inverter category and the 3-star fixed speed category. There is a bomb increase of almost around 15%. So the brands will be picking up a lot of inventory before the switch over to the new rating energy label in 2026. So we expect a good pickup in going forward.
Okay. Now, your business guidance was revised downwards marginally, but the overall revenue targets still remain, I believe. How do you anticipate the non-room air conditioning segments like washing machines and refrigerator production ramp up to offset the RAC growth?
We are quite confident by the end of this year of FY26, we will end RAC also with a growth of around 15 to 20% on the back of the industry degrowth of almost 10%. So we are very confident of that. It is based on the order book and the forecast that we have till the FY26, the March ending of 26, we have that kind of order book with us. In addition to that, all our other product categories like washing machines are doing extremely well. We are quite confident that in first half, we have grown more than 50% in the washing machine business. We are confident to maintain similar momentum in the second half as well. And in our plastic molding business, in our electronics category business, we are seeing a robust growth. So that is also pitching in with some numbers. And we are confident that we will be able to recover some kind of a loss of revenue that we are seeing on the AC part.
Okay. Now, Vikas, I want your view here. Trent, when they gave out the release, said that people are going for the premium products right now because of the GST cut, and it has not quite come into the lower end. What you are saying in part reflects that, but I would love to know whether October, mid-November, etc., has shown signs of that across product categories.
We are confident in Q3 also, we should be able to deliver some kind of a growth in our numbers as compared to the Q3 of FY25. We are quite confident on that. So we are confident to grow our numbers for the Q3 of FY26 as compared to Q3 of FY25. We are confident on that. It is based on the multiple product categories that we handle, like we handle washing machines, as I told you earlier. So we are seeing a very strong momentum. In RAC also, as I told you, because of the change of the energy table, there will be a pickup that we anticipate and we expect. And based on the confirmation that we have from our clients, we will be seeing a lot of pickup of the inventory before the end of December. So we are confident that we should be able to maintain a good momentum.
Okay. With a healthy order book and the anchor customers for the refrigerator business, would you expect this to, kind of start production in Q3 FY27? And what would be the project contribution margins as well as the revenue potential from this vertical over the medium term?
So for refrigerator, our plant should be up and running by Q3 or Q4 of FY27. We are in process of very advanced discussions with one anchor customer, which will take up almost around 30 to 40% of the installed capacity. And the ramp up will also take some time. I think by second or third year of our operations in refrigerator business, we should be able to realize a revenue of almost around 700 to 800 crores from there. So that is the kind of potential of the revenue that can come from the refrigerator business going forward in the next 2 to 3 years.
Your Capex guidance, though, I believe you've maintained at 700, 750 crores. But, I mean, it's a challenging Q2. Could you tell us where is it that the monies would get used? Because I'm guessing RAC segment being low, you probably don't need to expand too much there.
We are sticking to our Capex guidance of around 700 to 750 crores. That is the Capex that we are already undertaking for FY26. And that the broad allocation will be almost around 250 to 300 crores will go into the expansion of our capacities in our AC business. And there is a new facility which is coming up in Bhiwadi as well, which should be up and running. Then the around 250 to 300 crores are being allocated for the our refrigerator business. And I think major part of that Capex should be realized by before the end of FY26. And I think the balance will be going to the further product development and the investment in our washing machine category. So in washing machine also, we are further increasing our capacity to take it to more than almost around 2.5 million kind of washing machines of the capacity that we are creating now. So that will be the broad breakup of the Capex.
And Vikas, last question. I mean, you maintain your FY26 net profit guidance at 300, 310 crores. Following a Q2 miss, I'm trying to think what will happen in FY27 where you don't have any of these issues, a better base as well. And what are the risks, of course, to meeting this number as well?
So, Neeraj, for FY27, I cannot give you any comment right now. We are going to come out with the numbers for FY27 towards the end of March of FY26 because we have a sense and more clarity. Please mind it, till March FY26, the numbers, why I'm showing you the confidence, because a lot of pre-build, the manufacturing will happen, the primary sale will happen. It's only when the actual summers will hit and when the sale will start happening, the tertiary sale will happen, the second sale will happen, then only we can make out how the Q1 of FY27 will play out. That is when we can give you the better clarity how the FY27 will look like. But we are keeping our fingers crossed. Neeraj, please understand, we have to look at this as a long-term view. We cannot look at a quarterly basis. We have to look at how in next 2-3 years, we can harness this. The opportunity is going to be very large. Maybe 1 or 2 quarters here and there, 1 or 2 weathers here and there, but we should be ready to see whenever there is an opportunity, we should be able to have a capacity available for that. That's why we are still sticking to our Capex guidance.
Got it. Okay, Vikas, well, wishing you all the best with all that confidence and all that delivery. Thank you so much for taking the time out and being with us. And that's PG Electroplast. Remember, one player, EMS player, which hasn't quite gone ahead and cut the guidance despite an iffy Q2. And look at that confidence that the market has in that commentary. The stock has gained as the management was talking to us, 1.45% higher at the high point of the day. Clearly something that the management said stuck well with the audience.